Well, 12 years ago, we were in the midst of what was called a once-in-a-lifetime economic crisis, and right now we're facing another one. On the front page centerpiece this week, how Cincinnati's largest bank on the front lines of this pandemic is more prepared this time around. Fifth Third stock has been hammered. Its earnings have plummeted. And still, CEO Greg Carmichael says even if things get more severe than in 2008, the bank will be just fine. But that doesn't mean it'll be easy. Carmichael talked with Courier reporter Steve Watkins several times for the story. And Steve joins us now via Skype with some insight. Hi, Steve.
Hi, thanks for having me.
Thank you so much for being with us today and talking more about this story. Of course, we know about the economic impact and the financial impact this is having on our community. How is Fifth Third so much better positioned than it was for the last crisis?
Well, there are a few things going on. One is, in general, banks are better capitalized, and Fifth Third is certainly among those. Fifth Third's case, they have about 50% more capital than they did last time, Greg Carmichael told me. And so they're in much better shape. They have a lot more liquidity, which is basically just excess money that they have to cushion loan losses. Now, he did say there will be loan losses, but he feels like they're positioned for them. They also do these stress tests, which basically are various scenarios that envision the economy taking a drop. And under any of those scenarios they've tested, Fifth Third emerges well capitalized. So that's a good sign. Now, he did caution they have not stress tested for something the size of a pandemic. Nobody really envisioned the entire global economy basically shutting down. So things could get worse. He did say if it's something like the Great Recession, we'll be fine. If we go back to the 1930s, like a depression, then everybody's in trouble. But Fifth Third has also planned for a downturn, and they've taken a number of steps over the last few years to get out of some of their riskier loans. He said last time he felt like Fifth Third was not in really great shape heading into the banking crisis in 2008 and 09. He feels a lot better this time around.
Well, that's encouraging, but as you just mentioned, none of us could have really prepared for this pandemic. And so how is the coronavirus impacting Fifth Third's results?
Well, it has certainly had a big impact. They reported earnings on Tuesday morning from the first quarter. That ended in March. So really only the last couple weeks were part of the coronavirus shutdown. But Fifth Third took a $518 million pre-tax loan loss provision. That doesn't mean they've suffered that amount of losses yet, but they're kind of preparing for loan losses. Greg Carmichael said there will be a lot of loan losses, and so they're getting ready for it. So that hit their earnings. Their earnings fell 96%, so pretty big drop. And as you mentioned in the open, the stock has gotten hammered. It's down. It was down as much as 50% or even a little more. So it has had a big effect, and it remains to be seen how many loan losses there will be.
And how does Greg Carmichael see Fifth Third performing through the downturn?
Yeah, he said they can manage profitably through this, so that's a really good sign and a big difference from last time. He feels like their loan loss reserves are enough, but he said he would not rule out taking another reserve if they need to, if they start seeing bigger losses than they could expect. And he mentioned they are planning for what they call a U-shaped recovery, a long, slow recovery, and not this V-shaped recovery that a lot of people are hoping for, where the economy just bounces right back. He said they're being conservative. He hopes they're wrong, but he thinks it'll be kind of a slow, gradual rise, and they're ready for it.
Well, that sounds good. Thank you so much, Courier reporter Steve Watkins, for joining us today. We'll certainly keep an eye on Fifth Third and the rest of the story around coronavirus. Thank you.
Thanks for having me.